Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're going to be joined by the team from DMG Blockchain. This is one that we've covered for quite some time on the channel. In today's video, we're going to be talking about post-halving April production, their growth strategy for 2024, and the merger or M&A landscape we're seeing in the Bitcoin mining community. Now, before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of DMG, what your thoughts are on this company and their growth plans in 2024, and how you think they stack up to other players in the Bitcoin mining space. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got the dynamic duo from DMG Blockchain Solutions back in action here. We've got the CEO, Sheldon Bennett, along with the COO, Stephen Eliscu. Guys, you've been on the program a number of times. We're really looking forward to this discussion in the post-halving world and environment here. Thanks so much for being here today. We're really looking forward to it.
Thanks for having us back.
Yeah, thank you.
You're most welcome. So we've got a good list of questions here from the subscribers, but for anyone who's missed our previous interviews or coverage on DMG, can you give us just a quick high-level summary or elevator pitch of what your organization's all about?
Yeah, DMG is one of the first publicly listed crypto miners. We went public in 2018. We started as a private company in 2016. Our operations are in Christina Lake, which is a small town on the border of the U.S. in the Kootenays, so in British Columbia. On our main operation, we built our own substation. It's 85 megawatts, which is, at the time, quite a bit of power. I think nowadays, when you hear people talking 5, 6, gigawatt, maybe it's not so much power anymore. At our location, we run just around an exahash. We're moving ourselves over that, and we'll talk about that today. As well, when we started as a company, we purchased in 2018 a company out of Silicon Valley called Blockseer. Blockseer was a data analytics company. We've taken that company over time and grown on additional software services, including a pool called TerraPool, Petra, which we use for ordinals and financial transactions inserted into a Bitcoin block. As well, we've now started a trust, a digital trust, hopefully the second qualified custodian in Canada after Tetra. And yeah, we've got some new partnerships we want to talk about, and we're, as I said, we're a TSX Venture listed company.
Yeah, there's sure a lot going on, especially for a company of your size. You also have the PayPal announcement. So we've got a lot of news to get into today, you guys, especially those growth targets and update on the immersion technology you're implementing as well. So let's get right into it. Now, I know you just put out April production results. April was obviously a very critical, pivotal month for the Bitcoin mining community. We had the halving take effect that month, and obviously a lot of changes to the landscape in terms of network hash rate, difficulty, ordinals, transactions, runes. There's never a dull moment here, it seems. So walk us through your April production results and I guess some of the highlights you saw in April.
Sure. I think on a high level for April, talking about the halving, we were one of many who wished we would have won the block. And it would have been great to have a carbon neutral block at the halving. But outside of that, our production numbers, were in line with our expectations. Maybe Stephen can sort of take you through a few of the finer details.
Sure. And so with the block halving of the subsidy, we did see a sequential decline from 50 Bitcoin the prior month, 39. Part of that was the halving. Part of that was also the fact that we have dialed back the hash rate, because when you dial the machines back using our software, you're able to get a larger reduction in power, which means the efficiency of the mining of our legacy mining fleet improves. So what we've done is take it from 28.4, where it was the two prior quarters, down to about 26, maybe even a little bit lower as we work to optimize these machines. We're bringing in a new fleet of T21s that will give us approximately the same amount of hash rate as our legacy fleet dialed down in this low power mode. And together we expect 1.7 exahash by the end of the quarter, and at 23 joules per terahash in terms of the efficiency. So that's a really big improvement in the efficiency. The best way to think about that is to run an exahash of mining. Before would take 28.4 megawatts. Now it's going to take 23 megawatts. Of course, we're expanding to 1.7, so our energy bill is going to go up, and our hash rate is going to increase to be able to offset the effect of the halvening. But also, we've seen the beginning of the network hash rate to come down, and the dynamics, at least we hope that over the next couple months, we're in a place where our overall revenue, Bitcoin, in terms of the Bitcoin we generate, and the cost structure are very similar to where they were pre-halvening. So that's kind of where April is kind of the first month that shows that transition. And over the next couple months, as we report, we'll be seeing this evolution to where we think Bitcoin, competitive Bitcoin miners need to be in terms of efficiency and being able to grow their hash rate coming out of the halvening.
Sure. Yeah, and we were just talking about that before we started filming, Stephen and I, about how everything may take a couple months to kind of shake out here as miners are debating whether they turn off or not. Now, I had two follow-up questions. I did see in your April production, and correct me if I'm phrasing this wrong, but essentially you turned down the overall capacity in favor of more efficient rigs. Where is the limitation on that one, Stephen? Can you continue to do that, or are you guys pretty close to kind of the optimal joules per terahash efficiency?
I think we have more room to do that. It's the diminishing gains. I think we've been able to get a good chunk of those gains because much of our legacy fleet is the Bitmain S19j Pro, and they do offer the opportunity to dial those down significantly and still have decent hash rate. And as I said, we're still optimizing that. I think we're probably pretty close to where we're going to end up in terms of that. Ultimately, that fleet will have to be retired. It's getting towards the end of its life, let's say somewhere between half and 2/3 through its life. But it still has some time to go. The other thing is when they run cooler, they also, in terms of the overall reliability of the miner, that they run a lot more reliably because they're just not pushing the fans as hard, not pushing the power supplies as hard. So in terms of the amount of repair and maintenance they'll need is also commensurately less. And so we think this fleet will be around for a while, but it's really about adding new miners over time. And in terms of just how DMG runs, this is just another example of our capital efficiency, maximizing the useful life of the equipment and continually to upgrade over time.
Yeah, very interesting stuff. And I got to say, of all the leadership teams I meet with, I always look forward to the DMG discussions because you guys have an extremely high level knowledge, technical knowledge, expertise, industry knowledge. I always learn a lot in these conversations. So I want to dig a little deeper into the growth topic and these new machines coming. You mentioned the T21s are kind of the new machine of choice. I know Bitfarms, Ben from Bitfarms was very happy with the performance of these, saying they were actually able to come out of the box about 25-30% stronger than he anticipated. Plus, you've got the ability, like you say, Stephen, to scale up or down. I believe it's covered in warranty on the T21 as well. Are you seeing the same kind of things as you're plugging these machines in? They're surprising to the upside?
Yeah, I mean, go ahead, Sheldon.
Yeah, so I was just going to say, I mean, we've been plugging ours in on site, and we've been really happy with the performance. The fact that they are more heat resistant is really a great benefit. You know, for us in Canada, we don't have as much heat except for a few months in the summer, which can be really hard. The 19s, the way that the heat the temperature chips were put on the boards really created a lot of problems with them overheating, sort of artificially overheating. And a lot of people were taking those chips and moving them to different parts of the board where they're cooler to keep the hash boards hashing. With the new T21s, so far they've been running quite flawlessly. We haven't seen any issues. We're getting probably this weekend our first 30C day coming up, so we'll see how they perform there. But so far, we're expecting them to perform quite well.
Makes sense. Now, continuing along the growth theme here, you guys. So over the last 16 months or so, since about January of 23, exahash for DMG has stayed fairly consistent. As you mentioned, some tweaks with software here and there, but in the 0.9 exahash range. Can you talk to us or give us a little bit of a roadmap in terms of the time frame to get the 2 exahash, the 3 exahash milestone? I know you kind of alluded to getting up into the mid ones there. What's the timeline and roadmap to get to these milestones?
It's another good question. So what we see with our existing fleet, so our S19J Pros plus the new T21s, is that we're going to run them efficiently at about 1.7 exahash. Depending on Bitcoin price, we could crank them up a bit and hit our 2 exahash just with that fleet that we have. Our path to 3 exahash really is about adding an immersion. And, we've been talking to suppliers that have immersion ready machines. So the 3 main suppliers have them. The most interesting right now, and we're not saying for sure that's what we're going to do, but the most interesting right now is Bitmain coming out with a new immersion ready miner. And so if we were looking at what we want to do with our legacy fleet of S19J Pros, most likely we would be replacing them with a new immersion miner. And just that replacement would head us at that 3 exahash level in Christina Lake. And that's not to say that we take that legacy fleet and run it somewhere else. We could still do that, or we could still run them as long as they're able to make a profit. So, we do see Christina Lake with the efficiency of miners increasing and the amount of power we have there continually being upgraded over the years, and the exahash moving up with the efficiency of equipment.
Great. So I was going to ask about bottlenecks next. Is there any bottleneck there in terms of scale or expansion, energy potential, facilities, infrastructure? Or are you pretty confident with the growth plans at that location?
At Christina Lake, I think everything is well understood. We've been running that facility for 8, coming on to 9 years now. So we don't really see any bottlenecks there. It is, the next big project there after all the T21s are running, which is what we're busy working on right now, will be fully implementing immersion. So they're kind of collided together at the same time as the tanks are ready, and the dry coolers are ready, and the fluid's ready. All of the T21s came in, and all the mud containers came in, and all the transformers came in. So the crew kind of looked at them and went, oh my God, what are we going to do? So obviously we picked, prioritizing putting the T21s in over immersion, and some, debate about that just because the heat's coming in, but we think we have the heat under control better this year than last year. Last year was a hot summer that we have not seen before, so there were some areas of that management where we weren't used to such hot temperatures so long. This year we made some changes with our water walls and some of our systems we have for cooling that we're ready for a really hot season like this, as well as changing the fleet and running them more efficiently. So we think Christina Lake should run a lot better this year, and so we're quite hopeful on that. Outside of that, on the growth side, it really comes down to we've announced that we've taken on debt. We've announced that we're not really interested right now in any equity type of raise. As you know, to grow in the world of crypto, as you can see all of our peers, they grow through equity raises, ATMs or share sales. We've been trying to hold off on that. We may have to do that. We don't know yet. But we're really counting on using debt. And we still have a large HODL. We just came out with what our HODL was yesterday when we had a press release, which is quite significant for the size of the company we are. So we do have access to a lot of cash. So when it looks at growth, we're really just trying to figure out what's the best use of our capital and what's the best use of debt versus equity. And it's hard, and the great thing is that we have a very supportive board. We've made some really good decisions in the past. As you see, our last quarter was a positive quarter. We're going to be announcing a new quarter shortly. We'll see how that one turns out, but fundamentally, our financials are very strong. Our balance sheet's very strong. We have lots of digital assets and cash. So really, for us, it's just making the right decision and making sure we do that consistently.
Sure.
And I also want to highlight that we did announce that we have another site outside of BC that also gives us the opportunity for growth, and also to think in terms of exahash growth. If you just take with the 36 megawatts that we have reserved for immersion, and you say it's the miners, just for easy math, are 18 joules a terahash, which is kind of where the new generation immersion miners are expected to be. You just do 36 divided by 18, that's 2 exahash that we can get as a result of just having that capacity, plus there's the additional site. So you get the idea. We certainly have the path to grow, and it's really making the right choices in terms of getting there, managing our balance sheet as prudently as possible.
Yeah. Now, would you guys consider any type of merger of equals or anything like that, as we saw with HUT and US BTC, or are you looking kind of more organic growth from here?
It's hard to get away from discussions of mergers in this business. I think everybody's sort of talking about it. And we've had discussions with companies in the past. I'm sure we'll have them in the future. Obviously, we're not against any type of merger that makes sense. Sometimes it's hard to get a merger to make sense, just because when you look at now the cost to buy an exahash, whether if T21s or S21s or a MicroBT product, and you look at the cost of buying a company that has already an existing fleet and equipment, normally you can build it, that exahash yourself at a lower cost than merging with a company. And that's the biggest problem, is trying to work through that issue, because people have put a lot of money into their companies when crypto was much more expensive, when the miners were much more expensive. And so it's hard for them to get that value up for the shareholders. So putting these deals together can be really hard. The one thing that's changing is the value of the power, and the power assets are getting more valuable than the hash rate that you have in that fleet. And so the economics are changing a little bit about how you look at evaluation going into any kind of M&A. But we're always, on the look for something good. Obviously, we would like to look at somebody our size or smaller. People bigger than us look at us. So, we always have that happening. But we're, generally open to, as any company would be, to something that's good for our shareholders.
Part of our job is making sure we do continually search for those power assets. So when you look at, and we believe we do have a path for additional power assets. So when you look at what it costs to buy an exahash, $14 a terahash means $14 million in exahash. I really doubt any CEO who has an exahash of mining would sell his company at $14 million. So you kind of get the idea. Part of what we would look at in terms of, because we're focused on our software and services, what we call our Core Plus part of our business, something that would help accelerate that part of the business is more likely where we would focus, rather than try to bolt on additional mining. Of course, also as a TSX Venture listed company, being able to uplist to the NASDAQ or NYSE, a business combination potentially would allow us to also uplist is something that would be for consideration. But I think when it comes to just straight Bitcoin mining, Sheldon and I have been around a really long time, and just build versus buy usually ends up as build.
That's exactly, yeah, very interesting. That's exactly what we've been hearing from a lot of the companies. Rob Chang from Griffin said it very nicely. He said a lot of these companies need a little bit of disappointment to bring some valuations down. So that's kind of what we've heard, and we saw that actually with Hut 8 as well, building that new facility for substantially less than purchasing one. Now, let's move into the Core Plus stuff because, as I mentioned, this is a real focal point for me with DMG. A lot of interesting technology at this company. So Core Plus is essentially everything non-Bitcoin mining from DMG. Before we get into it and the PayPal announcement, I guess, do you mind giving us just a little bit of background on what makes up Core Plus, either Sheldon or Stephen?
Yeah, so Core Plus is, like I say, it's all of our software. So it started out with something called Blockseer Explorer, which is very similar to Chainalysis or Elliptic. It was one of the first, I think it was actually operating before Chainalysis was an actual company. From that, we built technology on top of it called Wallet Score, which added in information about the historical transactions from wallet to wallet. So that was looking at, whether there was taint there. So we had different indicators of information we get to see whether or not the Bitcoin that was moving from wallet to wallet historically came from, bad places. And we would figure out what those bad places were through our software. So we could find out, if it came from a bulletin board wallet address that was linked to terrorism, or if it was linked to, a gambling website as, crypto was moving in and out of it, or if it was linked to, OFAC blacklisted wallets from the U.S. government. So we had all of this, and we still have all this technology that goes out and gathers this information, and we score that wallet at a risk level. And there's lots of people that like that risk level scoring. On top of that, we started thinking about some of the problems as a public company, and a lot of our problems were with mining pools and how we can substantiate our revenue. So we got into the idea of creating a pool. We created our first pool called Blockseer Pool. We then licensed that to another company. We created our second pool with Argo a while ago called TerraPool, which we still operate. And in the pools, we realized that we needed a bit more technology to do what we wanted it to do. And so we could filter out bad actors, at requests of our clients. And so we were doing that as Wallet Score. It was easier to call it clean block mining, so we kind of coined this clean block mining, just because it was easier to say than Wallet Score. And then we realized with that we also needed to be able to put transactions in. And so even before Ordinal started, we created something called Petra, and we were working with some partners and figured out how to put transactions into a block. When we had figured that out about, I don't know how many months later, Casey came up with ordinals. We realized that the technology we had already built worked with ordinals, so we started doing some of the biggest ordinals. And you may remember, Bored Ape Yacht Club and D-God and Rare Skrilla were some of the biggest names. And we continue to work with different artists on more to come in the future. We got that piece going, and then we were trying to get this concept of using the pool and its carbon neutrality of TerraPool with private offices, exchanges, and other interested parties that wanted to do transactions without carbon in them. And there's a big mandate out for, institutions to trade carbon free. And there's all sorts of programs and policies out. And we thought, well, we've kind of created this within TerraPool and the technology we had. So we went to a few exchanges and said, hey, we can do all your transactions carbon free. Just send us the transactions and run the coins through us, and everybody will be happy. We can give you the information that shows carbon free. That didn't work so well. Steve and I learned the hard way that you can't just walk into an institution and say, please transact this way. So we kind of figured out through a lot of discussions and some time that we really needed a custodian company to really set this free and really work on this at a institutional scale level. And so we started Systemic Trust with Lawrence out who previously was at Binance Canada. And, we started that process. We made a lot of progress on that. I think we're pretty close to getting our license patent, which is the first stage of us becoming a trust. Once with that, we can start holding digital assets. Then the next stage is to become a fully qualified custodian. when we become a fully qualified custodian, we can hold assets for exchanges and broker dealers and so on and so forth. And that really gets us the ability to take that trust as the middle in between an exchange or an office or whoever wants to move crypto at an enterprise level through our custody, from our custody, go in through our pool and come back through. And so we can kind of get this ecosystem working properly. And so that's kind of our software stack is kind of started with a small thing like tracking crypto, understanding propensity of good or badness in crypto, so ranking it, and then taking that, throwing it into a pool, adding clean energy, we didn't talk about it, but we have SOC 2 Type 2 on top of that, which gives information to auditors and people that our systems are properly configured and operating, adding in clean block mining, adding in Petra, now throwing the trust on top of that. And now we've got this ecosystem that works together where we can start onboarding exchanges and other, institutions that want to use the service, throughout North America, which is our focus in the near future. So we've got a few we're talking to, and we're making really good progress on this. And that's kind of our software in not a nutshell, because it probably took me 7 or 8 minutes to say all that.
See, look at how much I'm learning, though. Now, where does PayPal fit into that whole equation? Because I know you just announced that big partnership as well.
Yeah, PayPal's really interesting. Steven's really been leading a lot of that, to be honest. Maybe I'll let him say a few words on it. But for us, PayPal kind of, it's a way of giving us the confidence of a lot of stuff that we've been doing, people have been watching, or people are thinking about, and not, in large corporations. And we see PayPal, they got into crypto early. They got their own stable coin. They have their own team. For them to find us out of all the companies they could find, and really focus with what we're doing. I think the part where we have a carbon-free pool, a carbon-free operations, and just the way that we look at how transactions can be put together and done. I think that was interesting. I think the fact that our team works with Bitcoin Core a lot, and we have a lot of knowledge. You don't find that often in crypto companies. Most crypto companies you talk to are miners, not software companies on top of a miner. So I think that they found our knowledge of mining plus our knowledge of Bitcoin Core quite interesting, which really kicked off the partnership. But I'll let Steven's been headlining the partnership with them.
Sure. I mean, with having a carbon neutral pool and being able we have an understanding of how to build blocks. The idea with PayPal is very complementary to what we're doing with Petra. With PayPal and Petra, both, however, are to give financial institutions the option to send Bitcoin in a carbon. There are just two different ways of doing that. And ultimately, our objective is to get a premium on the fees for those transactions relative to non-carbon neutral, just the standard broadcasted transactions. So that's where we really see it's a financial opportunity because we're giving financial institutions this option, and working with PayPal, it's an alternative method that rewards green miners. And so we think this is good. Ultimately, this drives in terms of TerraPool's growth, our growth target, which is to become much more significant in size, and validation as well that people are willing to pay a premium to have their transactions, their Bitcoin transactions, without adding CO2 emissions. So we think this is, from a high level, I encourage to read the paper on Mirror, which is the website where the PayPal paper is. But it's just, when you look at the mechanics, you could think about, well, does this make sense? Does that make sense? For us, this was just a test. And we really look at it more as the fact that a big financial payment processing company is saying, I want to decarbonize the financial system. I want to decarbonize the Bitcoin blockchain. And let's partner with DMG, who has the expertise, has the software and physical infrastructure to be able to do this. When you look at, there are plenty of other companies who could potentially be good candidates to do that. But I think the fact that we've taken a leadership position is the reason PayPal came to us. And I should also just say, part of this happened through the relationship with EnergyWeb, which has also been a leader. And in terms of certifying, having a third party to certify that the infrastructure or the power assets to mine those blocks is free of carbon or has minimal carbon content. So we think that's also exciting. That was another key ingredient, is having these third parties to validate the green aspect, so we avoid the future accusations of greenwashing, and that this is a real effort to decarbonize the Bitcoin blockchain.
Yeah, really exciting. And Sheldon, do you have something else to add in there?
I think a lot of people didn't understand in the white paper that, what PayPal is saying is on top of, on a mining pool, on top of the block subsidy and the transaction fees, they're actually adding extra money out of PayPal's account to green miners to incentivize them to be involved in their transactions. And I think a lot of people, they kind of missed that. They were like, oh, why, you just want green energy here, there, or whatever. It's like, no, they're actually paying a premium. When we say paying a premium, they're actually paying extra money to Bitcoin miners that, are, carbon free or, close to carbon free, however EnergyWeb does their work. And, we've been part of that, and many other companies have been. To work with them on ensuring that their transactions of PayPal's are as carbon-free as possible. And so it's kind of one of the first times you're seeing a premium for carbon-free. People kind of talk about it, and there's some people trying it, but there are very few transactions where you can point at and say, hey, look, somebody paid a premium for carbon-free energy. And for us, it's really exciting because we've been on this journey for a few years saying that there's value in carbon-free, there's cost to carbon-free. Getting carbon-free energy, unless you're lucky to be on a hydro plant or something where it's free, you're getting it as your main source of power. Normally, most power is a mixture. And so there's a cost to it buying RECs, or there's a cost to doing, cleaning your power to be carbon-free. And that's real money. I mean, some companies that are Bitcoin miners are paying real money every year. There's a few public ones that talk about it to be carbon free for their shareholders, because that's part of what they want to do as a company. So that costs them money. This is helping them subsidize that cost by working with PayPal on their future project and getting extra revenue just because they're carbon free. So we see this as really forming of a new market that is kind of bubbling up, and hopefully over time, we'll be at the forefront with some of our technology and some of the products we have for people to work with us, but for also people to get that premium for being carbon free.
Well, and I love to hear this. It's so interesting that PayPal approached you guys, and I'm telling you, it's the technical expertise. You've got something special here, but you see this in any industry, right? People pay a premium for fair trade coffee or for diamonds that are mined in Canada versus conflict zones. So I think it makes a lot of sense, and I think the timing is so interesting now with the big pension funds and the ETFs and the institutions coming in. I know living in Alberta, there's a big focus on oil and gas investment for ESG and companies that give back to the community and stuff like that. And I think Bitcoin and Bitcoin mining will follow a very, very similar suit. And like you say, you guys have been talking about this since we started doing our interviews. It seems now the market's just kind of catching up to where your vision was. So very interesting development there. And I do appreciate that you pointed out there is already a premium being paid on some of these transactions for that green energy exposure. So very interesting stuff here, you guys. Along that kind of line of thinking in terms of alternate revenue streams and non-core mining revenue, is there any interest from DMG in the HPC AI space, or are you feeling like these other endeavors are kind of taking the focal point?
It's hard to ignore AI and HPC. It's such a big market. It demands a lot of power. I think regulators and the general public will soon stop looking at, crypto as a net consumer of a lot of power where they're unsure of the value of that power. And they're going to start looking at AI going, holy smokes, this is consuming way more power than crypto. And what's really the value we're getting out of this? Google was already answering a lot of our questions. Is AI doing much better than that? Probably. I'm not an AI expert. But yes.
But we're getting all the cool AI pictures, Sheldon. We're getting to be able to crop our heads onto animals and things like that.
I don't know what our designer does anymore because she designs stuff so quickly. I'm not too sure if she's just using AI or if she's actually like drawing things out and making them. But for us, we are starting into, as you know, we're a cautious, thoughtful company. And I reiterated this a few times to some investors. They're like, why aren't you going into AI and doing all of this? And why aren't you piling money into it like others are? And I said the same thing. I said, well, it's kind of like, why didn't I pile money into Ethereum mining? Why didn't I buy all these GPUs in Ethereum mine when I knew it was going to proof of stake? And what would I do with my fleet? Maybe I could repurpose it. Maybe I couldn't. Maybe I'd have to go sell it all off on eBay. It wasn't really something that we felt comfortable piling money into as shareholder money. Whereas Bitcoin, we kind of were pretty sure it was going to be around past the time frame of the equipment, and there weren't any announcements or any talk of it going to proof of stake. So with AI, we kind of see it the same way. Steve's done some numbers on it. We do have our first units, a few units we bought of boards and RAM and CPUs. We're waiting for a couple of the GPUs to arrive, and we're going to try a few things out with them. And we're going to experiment with it with the goal of, how can we better understand our ROI? For a crypto mining company, you have to realize that we don't have a client. We have a protocol. And all we have to do is give it hash rate, and it gives us coins. Right? It's very simple. But when we go into AI, we have to have a client with a client service agreement, and we have to have a certain uptime. We have to deliver so many hash or teraflops. We've never had clients before. We're not client-centric at all.
And you need sales and marketing and advertising and all the rest.
So, to just turn it on like that, I think is very cavalier of a company to do. And, sure, you can be successful if you resource and, pay for all of that resource. I'm sure that a lot of companies will be successful. Our approach is to take it a bit slower and really figure out where we can excel. It could be on the service side of it. It could be on the infrastructure side. It could be a hybrid of providing hashes or flops to somebody else. And so we're going to figure that out over a little bit of time, but we're not going to ignore AI. We're going to try and see how we can best manage that from an ROI point of view. And we're really looking at it as, if we were to buy another server that would do crypto mining versus a server that would do AI, what's our ROI? What's our cost? How well can we run it? Can we meet the specs that we need to meet in order to ensure that we get the proper cash flow from it?
Gotcha.
Yeah. So, we're going to need to leverage partnerships. That in itself is an effort. We're not going to build out a huge sales force ourselves. And the thing is, keep making sure the revenue is sustainable over time. It's nice to have some short-term partners to get the business going, but how do you necessarily build a business that's going to work long-term and really competitive? So we want to be able to, for us, we're going to need to figure out what workloads, where we can excel, and what kind of partners are looking to have those types of that type of hardware that's optimized for certain workloads. So just even that part is a lot more complicated than just thinking about Bitcoin mining and power assets and miner efficiency. Just that dimension is a lot more complicated. But on the infrastructure side, for us, at least one opportunity is leveraging our single-phase immersion, which is very low cost to implement and gives measurable benefits. And right now, the AI companies are going down the path of either air-cooled, and you need these very expensive data centers that can support 50 kilowatt racks, and just there's a lot of the PUEs the power usage effectiveness ratios are 1.5 to 2, very inefficient, just a lot of HVAC to be able to cool those miners, or these new kind of liquid cooling equivalent to what, let's say, Bitmain is doing with their hydro. Those have their own set of complications. We think ultimately single phase immersion is the lowest cost approach. Intel actually put out a paper on this a couple of years ago where they did a lot of research and looked at different types of immersion cooling, different types of cooling technologies that would be cost effective in the future. So we think that's potentially an opportunity over the next year or two to intercept AI in combination with focusing on hardware that's optimal with certain workloads and having customers that want those flops. So you see there's a lot of dimensions. I'm trying to give sort of next level to what Sheldon said, just to give an idea. We understand how complicated it is. So we're not just going to throw $10 million or $20 million at this, buy some NVIDIA-based hardware and hope we can sell those flops. We're going to be very measured. We're going to take a very measured approach, and we're going to seek avenues for competitive advantage.
Yeah. Just on that, when you look at what's going on with buying like A100s or other cards out there, it kind of reminds me to the passive Bitcoin where we had, those price spikes going up and down and up and down. And we're kind of looking at it as well, going, are we buying it at a high? What's going on with AMD? What's going on with NVIDIA? Is Intel getting back in the game? Are there new competitors coming out there with really good product as well? Maybe, maybe not. We hear different stories, but we don't want to be buying at the top of a market and then trying to make an ROI out of it as well. So, we're going to be really looking at this strategically, when's the best time to really get into the market and do a large purchase. But that's not going to happen until, we understand exactly where we can fit in, where we get the best return on. And we want to try and time the market better than, what market prices are now. Otherwise, you're going to spend, a few years just trying to work off the fixed cost of the miner, or so the GPU, before you get any net positive benefit to the company.
Well, and it's interesting. I was thinking the same thing as you guys were talking, because the AI boom is so new. We don't really know where we're at in that first cycle, right? And very similar to what we've seen with Bitcoin and Ethereum. So that's a fair response. And I definitely would say you guys are more of a conservative, measured, methodical kind of leadership team than some of the other. Even when you look at your ATM strategy or the Ethereum mining, the immersion you've been talking about for quite some time. Now we see Riot launching Corsicana with that same technology. So you guys always seem to kind of be one step ahead of the group, which I love about this company. Now, final question for you guys to wrap it all up. I know we've covered a lot of ground in the conversation today. Upcoming catalysts, you mentioned you've got quarterly earnings coming out right away here. Some of those expansion, the T21s, the immersion. Is there anything else investors should be watching for from DMG over the next few months?
Yeah, I think there's a few things. One catalyst will be with our trust, getting our letters patent, which actually means we become a trust. So we will be a licensed trust in the province of Alberta, which is your province. So I think that's a big catalyst. That's sort of halfway to becoming a qualified custodian, which then opens us up to being able to take in, I would say millions. I mean, we can put our own crypto into the trust right away. That's around 40 million worth of crypto, but we could allow us to take in billions of assets under management in crypto. And I think that's a big piece for us.
And Sheldon, sorry to interrupt. When is that? Are you just waiting on the paperwork to come back for the trust, or?
So, I mean, it's run by Lawrence. We're waiting for the first is our approval, which we're hoping to get this month, to become a trust, and will be set up and as a trust, no different than any other trust in Canada or in the U.S. Getting that first letter, it's called letters patent, getting that first qualification as a trust allows us to self-custody all of our assets in the trust. It doesn't allow us to work with third-party assets yet. We can't do that until we get something called letters, until we become a qualified custodian. That we're aiming for the end of this calendar year. maybe a bit earlier, but we're kind of aiming in that area. And so far, it looks like we're on track for that. So saying that we are a qualified custodian by the end of this calendar year, that allows us to go to any exchange or anybody that has digital assets that wants them to be held securely in a trust to put those assets in with us. And so it would be very much like Tetra, like Fidelity. There's a few others out there. There's quite a few in the U.S. But we would be the second after Tetra in Canada. And so Canada, if you're a Canadian institution or a U.S. company that wants to put assets in Canada to diversify, you would have two choices. And what would be unique about ours is that we would have the ability to run the trust, or at least a portion of it, for those that wanted the option. We could run it carbon-free with TerraPool. So all of the digital assets that you would move to us as systemic trust would all be put in and moved around and managed carbon-free.
And I think that's where the real power comes in, right? Because a lot of the people who are going to be putting big lumps of sums in trusts are probably the same people that may want the green energy exposure.
Yeah, you could have an ETF that's all green energy working with our trust. So that would be different than what's out there right now. So I think that's a big one. Obviously, our new site that we talk about, the reason why we don't give a lot of detail is that we haven't signed the definitive agreement on our new site. We're hoping to get that done soon and get that press released. We think that, our investors will be really happy with the new site we found, not only the size of it, but also its ability to grow over time, which is what we really like about it as well. So I think that's a real catalyst, both on the core and the core plus is a new site, plus what we're doing with the trust. Stephen may have a few other ones out there.
Yeah, well, I think that summarizes it pretty well. It's just the ideas on Bitcoin mining. We're here to stay. We have a path not only for improved efficiency and hash rate growth, but lower cost or lower average cost of energy. So we're here to stay in Christina Lake, but we want to expand to sites where we can get access to lower cost electricity. That at least gives us the foundation in terms of Bitcoin mining, where we think the halvening is going to be an event that separates those who are not prepared to move forward in this environment, where the block subsidy is 3 1/8. That's a big deal. So that in itself just kind of keeps us in the game. I think that helps our stock multiple, especially people are going to look, has their hash rate significantly grown to offset the decline in the block subsidy? Have they improved their efficiency? Do they have a path for lower energy costs? We check all the boxes. But we've always said we think the core plus strategy is ultimately what's going to drive the valuation of the company. And Systemic Trust is really the crown jewel. Lawrence Strong, who is heading that with his pedigree, and what he's accomplished so far. And I also want to just give a shout out for our own developer team, which is building the software that enables that customers to interact with the trust. We really started beginning of the year, and we're largely through that. So they've done a great job, and we've been working very closely with the folks who are at the trust, who are really operating as a separate entity. And we're very excited about the opportunity for our software team to generate lots of other things over the year. Our Helm Mine Manager, which we've used internally, we've said we want to offer that externally to miners who are not only on the pool, but just in general. But we feel that's a way of keeping miners on the pool, is to offer them additional value add. The ability not just to observe their miners, but to control them. And things like custody services and through Systemic Trust, and other options as well when they want to liquidate their Bitcoin. So we feel we are bringing a really unique package that all works together. And when we have all the pieces, which are coming together this year, we think as a whole, potentially generate some synergies that are greater than the sum of the parts. So we're really excited about it's not just a catalyst, but it's a stream of catalysts that ultimately will get us, our company, to where we think it should be in terms of valuation.
Sure. Yeah, this Core Plus package is definitely something special. There's a lot of exciting things going on at DMG. We'll be sure to have you guys back for the next earnings announcement as well. We appreciate the time today, guys. If you're still watching, hit the like button. It helps get this content to others who may find value. If you're not subscribed, McNallie Money, feel free to join. And if you had any questions that we didn't get to in today's interview, make sure to leave them in the comment section below. Guys, I'll kick it back to you for any closing thoughts. Thanks so much for your time. Really appreciate it, and very insightful as always.
No, thank you. We always enjoy being invited here. Perhaps in the near future, we'll have Lawrence come in and talk a little bit about the trust to give some more details on that.
Great. And we'd love to get out there and see the facility too. So let me know when we can drive out there.
Close. You can come.
There you go. We'll road trip one weekend. Okay, guys, have a good one. Stay cool out there in the warm weather this weekend, and we'll see you soon.
All right. Thank you.
Cheers.
Bye now.